Hi traders, and welcome to the Technical Analysis Market Wrap on Friday the 18th of February. So today we're going to have a look at the majors, and we're going to see that we've been, certainly moving over the last week, but we've ended up pretty much in the same place that we were last Friday. So as much as the volatility has been there, we haven't really made any ground on last week's level. So we'll jump straight into the charts and we'll go through all of the trades for today or early into next week. On the Aussie USD here, we'll start out. You can see here that basically we're at the same place that we were last week, but we did see some pretty decent movement down below the 71.40 area here. You can see right through here down to the very lows of 71, and it's certainly bounced up. I spent the rest of the week moving up, and we've got a bit of a doji candle happening at the moment. It's been a really interesting time around this point here. There's a lot of price congestion, and we're obviously in between the two moving averages, which is really slowing it up. Look, the momentum still looks long in the sense that we've got MACD power on our side, and it is still trading above the two moving averages now. Like, even though it was, a bit of a doji looking candle, you can see here that we're basically still above the 50 and the 20. So as long as we get a close above that level, and we get some positivity throughout today's trading and even into New York tonight, we could probably expect that we'll push up and get to that 72.90 to 73 area sometime next week. We are in the middle of this channel though. I'm very conscious of that, and it has failed at this point before, so we really need a decent amount of push to get this actually to close higher than this current candle here. That would be quite bullish for it, but again, we do have this right in our face, and I don't like it. So ideally, in a perfect world, we close at least the high of this candle to give us some sort of bullish momentum, and then we go to the smaller time frames to see if we can isolate an internal trend inside this channel. It's definitely stuck here, there's no question about that, but it's doing all of the things that would require a price movement up to the 72.90 to 7300 or 73 cent level. That's what the momentum is telling us. We've got the high, low sequence, and we're above the moving averages. So that's all good for the long. For the short, it doesn't look as nice because obviously it's got a fair bit of work to do. It's got to break down below the 20 and the 50 moving average, and also the support line at around that 71.40 and again the 71. So there's a lot of trouble on the way down and probably a little bit less trouble on the way up. But in saying that, there is, you can see here, right, this level here, let me put a horizontal line. I'm always looking to the other side of the chart to see where the problems lie, and you can see here right where we're at, or at the recent high of this candle, you can see that we've got a lot of congestion here, support right through this level here, a lot of resistance and support right through there as well. So it's no surprise that it's having trouble breaking past this level, the 72.20. We know the 20 is an important level anyway, but that's why I'm saying it needs to break above this level and actually close there, not just get up there. It needs to actually close above that level. And if it does that, it's got about 60 or 70 pips of relatively easy travel to around the 73 cent mark. But if it doesn't do that, it's going to probably find itself congested in this zone between it and the 71.40. So until we see a breakout of either of those levels, very difficult to trade unless you're scalping on a really small time frame. All right, we'll move over to the US dollar CAD. This is also in a bit of a congestion zone. I mean, it's pretty much channeling now. So really what we can do is we can channel up the bottom and the top of this and trade in between it, which is not such a bad thing. You can see that the highs are clearly defined, and so are the lows on this level. And of course, the lows have got the moving averages to actually back up the support, which is always an important thing. It's also got a previous support and resistance level that actually coincides with this. So we're talking about the one, I'll put right on there, we're talking about the 126.60 level, and the highs of around 127 to the 90s, so 128. Look, it's not a bad trading zone if you go to the smaller time frames. When you isolate it like this, it's going to make a little bit more sense when you go down to the smaller time frames. You can see that we've got a lot of internal mini trends happening here. What you can try and do if you want to scalp this one is effectively try and long it off the bottom level. As soon as you see a bit of a lightning bolt on the way up, you can long it up to the very clear targets of around that high 27. And also, if it gets to the 127s first, you can start looking for shorting opportunities to get it down with a series of lower highs and lower lows. There's just not a lot to report on the longer term trend of this one, because realistically it's definitely caught between a zone now. There's no question about that. Even though it's an important zone and it is quite high, you can see the MACD is flattening on the daily, which means that the moving averages, the 12 and the 26, are obviously very close together. And yeah, the 20 and the 50 tell us that anyway, so it's not like we don't know that. But at the same time, it doesn't mean we can't scalp it. It just means that we've got to be very vigilant on the zones that we've already been established here, the highs and the lows. And until one of those is broken, all we can do is scalp in between those zones. Now, if we get a close above this level here, if we get a close above the 128 or a close below the 126.50 on a daily chart, so it needs to be a daily, no lesser time frame would be sufficient because this is a very long channel. Given as the daily chart, you have to have a daily close on either side. Then we start to break up. If we get a close up here, we're aiming for the 129.50 to 130. And if we get a close below the 126.50, we start aiming for the lows of around 125.50. So good trading on either side. And I'm not really fussed which way it goes. It's just a matter of waiting for the right breakout and scalping in between the channel until that happens. All right, we'll go over to the US dollar yen. This has been a little bit boring, this one. Look, it's been pretty weak over the last session, and you can see the previous 3 days were really up and down. Not a hell of a lot of movement, not a lot of range, very difficult to trade. And if you go to the smaller time frames, you can see that, obviously we've seen a lot of congestion. Look, today's trading, or last session's trading, has been probably the best because at least it has actually started to form a series of lightning bolts on the way down, and you were able to actually get involved in that short if you were that way inclined. But realistically, we're seeing a lot of sideways action. Until it actually does something, it's hard to trade. It's in a longer term time frame as well. Ideally, the 50 will hold it. You wouldn't want it to go any lower than the 50, and a bit of a bounce up. Look, if we get a close above the 20 now and the daily pulls itself up again, it starts to look good again for a continuation long from around that 115 area up to the 116 and 116.50, which is the preferred trade. We don't really want this one to break down because the breakdown is a little bit harder to trade. Then it's got to obviously get past the 114, and we've got a lot of waiting to do to really get the confirmation and the momentum shift that we need to actually make that a valid and solid trade. So just be mindful of the level that it's at. If you want to scalp it, you've got to keep your scalp fairly short. On the downside, though, you have got a 50 moving average that you've got to contend with if you are shorting, which is right in its face. It's only about 15-20 pips away. If it does reverse, though, and holds up and closes above the 20 moving average on a daily chart, I think it opens itself up for a bit of a reversal, and we look for a series of higher highs and higher lows on a 1 hour chart, get them above the 20 and the 50 moving average on the 1 hour, and then we've got some trading opportunities again to try and get it to the previous highs of around that 116.30 area. Good trading there. If it gets up there and closes above the 116.30, it really opens up the top side. So that's the preferred trade because I think it's the easier path, and I think it's got the most amount of range if we can actually get that to happen. So it's a bit of a wait and see, but we really want to see this close above the 20, or if it's going to fail that, get below the 114 so we can start trading you down. Really straightforward. We just have to wait for it. All right, let's move on now to the dollar index. This one has been, look, it's been a little bit flat over the last little bit too. Like, it's pulled back over the last few sessions, but it's still holding up at a level where, really we are probably still pretty comfortable. I can see that the, obviously the MACD is, signaling that we're basically flatlining. The 20 and the 50 are coming together and almost running parallel. So that tells us straight away that the market's out of steam at the moment. And that's okay. The dollar index is at a place where you would expect it to be at support, right on the 50, very close to the 20 and previous support here. So there's no worries about that. It is in still technically forming an upward formation, but it's one of those ones where we ideally need to wait for a break above that 96 sort of 20 area, a daily close above there, and it would really open this one up for a big short on the euro. This is the one that you've really got to, I know I'm saying a lot of waiting and patience today, but look, that's what Fridays are. A lot of the time the markets have actually moved, so we're really preparing for next week. If we get a close tomorrow above that 96.30 area or 96.25 area, and it absolutely closes there, it really bodes well for a really good week's trading next week. And of course, if it starts to break down and gets below the 95.25 area, then we're going to see a serious long on the euro as well. So both of them are very opportunistic trades if they happen to close in those zones, but we've really got to wait for them. We can't just preempt that sort of trade because really otherwise you're just guessing. So you need to go to the smaller time frames to give it that chance. But of course, the euro is the trade we're talking about here. And as you can see, it's in the exact same position. It's at a very strong level of support in the sense that you can see here, this channel here has been in place for a very long time. Look at all that price action. This is a daily chart, right? So you're talking about months of action here in this zone. We're right in the middle of the bigger channel. So you can see we've got a bigger channel and the smaller channel. We're right at the right basically the center point of the bigger channel, but also at the top of the previous smaller channel, which is inside it, which is the exact halfway mark. So realistically, again, if you're gonna scalp this one, you're aiming in the first instance up to the 114.70 area. That's the logical zone, because obviously that's where it's been tested before. If it shorts below the 20 moving average and the 50 moving average, it's a pretty easy target down to the 112.50. So realistically, as much as it's in the middle, it gives you very, very clear targets. And I don't mind these sorts of trades when you are scalping them, because you know you've got your bounce. So when you know exactly where to aim for in terms of your take profit and also where your stop loss needs to be, I think it does make it a fairly easy trade. But of course, you've got to go to a pretty small time frame to actually trade that. Until it actually breaks above the top or the bottom of that main channel, we're not interested in any longer term trading. But if we go to the 1 hour, as you can see, all we need is a lightning bolt either side of this zone. We're right in the middle, as you can see. A lightning bolt on the 1 hour, or even on a 15 minute. We can probably go on a 15 minute and look for it. You can see the congestion here. But a lightning bolt on a 15 minute or a 1 hour will do the job, and they are your very clear targets, and you're inside a very big channel. And this is why it's great to actually go through and have a look at the bigger time frames, because it does give you the basis of where you want to aim for. So this is really easy trading for me. If you get a lightning bolt either side in that direction, the take profit is on both levels, on the low and the high, are very, very easy and very, very likely to be reached. So pretty easy trading once it happens. So yeah, wait for the lightning bolt and don't try and guess it, is my advice there. Wait for it to actually confirm. Once you get that lightning bolt momentum in either direction, then you're able to jump in and take advantage of it. All right, we'll have a look at the ASX 200 now. Look, a big sell-off off the highs yesterday. It was looking very, very good yesterday, trying to break above the 200 moving average on the daily and trying to get past this very, very important zone, which is at 73. 37 to 40 area. You know, you can call it all the way to 73.50 really, and it did reach it there for a second, but it was a very, very big sell-off, okay? And it actually started to selling off in the Aussie session well before it closed too. It wasn't like this has all happened in America. It certainly continued throughout the US session, but it actually really started to kick off in the latter part of the Australian session yesterday. So it's been a sustained sell-off now. Look, we're getting down to the 72.18. It's a big sell-off, 100 points move down off a previous touch. So that level is holding, and we suspected as much. You know, look, we did suspect it last week that level is going to be a very tough level to break, and it's certainly proven to do that. If it's one of those ones where we are going to have a look at the US index in a second, but it's going to be very reliant on what happens in the US, of course. So we're going to keep we'll look at the S&P 500 in a second. But yeah, look, it failed to break that high again, and that bodes very, very badly for any long opportunities past there. If it gets past this 20 moving average on the daily and actually closes below it, next week, you know, could be quite a significant sell-off week, and yeah, we might find ourselves in the low 7,000s very, very quickly. So, you know, a rebound will obviously tell us a different story, but again, we know that we've got very solid resistance there, so the upside is fairly limited until it actually breaks up above there. So one to keep an eye on. But look, let's jump to the S&P 500. This is the one that you really want to be watching, because this is the one that's going to affect the Aussie the most. If it does continue and we get a close below these levels here, like this is a sustained big drop candle, no question about that. It's struggling to get the highs. We've been talking about it all week, and even in the last few weeks, that it does seem to be struggling and stalling. And I know it's all this talk about interest rate hikes and inflation and everything else, but look, at the end of the day, the market is looking weak. You can only look at the technicals, and that's what we are, you know, trying to achieve here. And the technicals look weak on it, regardless of what the fundamentals are saying. The price action just doesn't justify the move up. Every time it gets up there, you can see the weakness kicks in. It's struggling to break past the moving averages, and this is still in a dead set downtrend. Okay, there's no question that the lightning bolts are on the way down, not on the way up. So on a daily, we're still in a prevailing downtrend. This little move up is just a kickback. Okay, so until we actually get a close above this level, and a daily close at that, we are in a dead set downtrend. So it's better to play the momentum play, which is obviously the big push is pushing down. As you can see, it's still trying to sell off even to the latter part of the session. So yeah, we're talking about, you know, nearly 7 o'clock in the morning Australian time, which is the latter part of the US session, and they're still trying to push it down. So yeah, nothing short of a big reversal is going to convince me otherwise. And if we get a close below here, we've got one more US session to go, obviously. If we get a close below here and we wake up Monday morning and yeah, we're somewhere in the low 43 sort of 20s and 30s, I would be thinking it's going to be testing those previous lows at around the 42.50 during the trading session of next week. And if it breaks that past that, then we're going to see a pullback of some significance again. So really, really interesting watching. And if you are scalping it, I always say that it's better to scalp in the direction of the prevailing trend, and the prevailing trend is definitely down on the bigger time frames on the S&P. So if you are going to look for scalping opportunities, generally you're going to find a bit more success when you're actually scalping in the direction of the trend. So just bear in mind that we are still in a downtrend on that, but it's certainly going to be a very interesting US session tonight. And a break below that 43 sort of 50 area is going to bode very well for a reasonable amount of weakness next week. But a big reversal, of course, and then we start to look for a break above that 4,500 again. And then once it does that, we start targeting the higher levels. But let price decide. But if you are going to scalp, try and scalp in the direction of the prevailing trend. So I hope everyone's had a great week's trading. It's been some pretty volatile moves. Even though we haven't made a lot of ground up or down, there's certainly been a lot of all-round movement in between channels. So hopefully you're able to capture some of those scalps. We are still in scalping mode for early next week. Keep inside these zones unless we get a breakout. Okay, have a great weekend. I look forward to seeing you all next week.